What coins are you most bullish on right now?
The crypto winter is important because there's so much hype in this industry and noise.
When it comes to somebody that's very bullish on Bitcoin like yourself, would you prefer to buy spot or MSTR?
The flywheel has stalled, so you're not getting more Bitcoin per share, and it's just going to sit there.
Thanks for tuning into the All Funds Network podcast. My name is Mike Schroeder. Today I'm joined by my co-host Skyler Steinke, and we are also joined by Mike Treidl, CIO and founder of BlueCoin Capital. Mike has over 15 years of investment management experience, including firms like Morgan Stanley, Capital Group, and Peyton Regal. Mike, really excited to have you on the show today.
Yeah, happy to be here. I'm excited that you guys are having me on and looking forward to having a very informative podcast and digging deep on several topics.
Awesome.
Absolutely.
Sounds great.
Let's yeah, why don't we kick it off with your background? So you spent time in Morgan Stanley, Capital Group, Peyton Regal, as I
Yeah.
just mentioned. But yeah, let's talk about that. And what was your aha moment in the crypto space?
Yeah, sure. So I like to call myself a recovering TradFi guy. I studied physics at Carnegie Mellon. I got my CFA, MBA. Spent about 15 years managing money in places like Morgan Stanley, Capital Group, Peyton and Regal, mostly institutional portfolios, fixed income, and equities. I first bumped into Bitcoin back in 2012, and I kept pulling on that thread until it took me over to my current career. 18 months ago, I finally made it official and launched BlueCoin Capital, where I run actively managed funds, investing in liquid tokens and crypto equities. And
Very exciting.
I can share with you my my full kind of crypto story. I think everyone has one.
Yeah, that'd be great.
Yeah. You said 2012. Yeah, what happened there?
Yeah, so I got into crypto by accident through a tutoring company, of all things. So back in 2012, I had stepped away from finance to build an educational tech startup. And while researching competitors, I came across one called universitytutor.com. It was run by a guy named Brian. So I started following his blog. He was a sharp guy, so I kept reading it. Eventually, I decided to return back to finance. And the last post of his that I read before shutting my laptop on that chapter was something called Bitcoin. And then, I go back into finance. And a few years later, I see his face on the cover of Forbes, the founder of Coinbase, Brian Armstrong, which got my attention. And the guy I'd been doing competitive due diligence on had walked through a door I'd only glanced at and kept moving. And so, I studied physics and computer science along with finance. And what always frustrated me about finance was how little it actually innovated. And so when I started learning about Bitcoin, I realized this is the first thing that looks like a genuine technological breakthrough in money. I started buying in 2017. And during the pandemic, I went deep. Wallets, DeFi, and eventually I started up a prop trading venture with a developer in Singapore, trading liquid tokens around the clock. And that's what convinced me that this opportunity set was real and durable enough to build a career around. And then, BlueCoin Capital launched in January 2025, and the rest is history.
I love it.
Yeah.
I love to hear the backstory of how you got into crypto. It's amazing.
Yeah. Who would have thought I was reading his blog, from way back in the day.
Crazy.
Yeah, a lot's changed since then, obviously.
Yeah, definitely. Yeah, he's done very well for himself.
Okay, so let's talk about. So you started the fund in January of last year. What was really the impetus for starting this for you? What made you think you could do this?
Yeah, after spending 15 years in traditional finance, I'd seen how it was done on the institutional side with stocks and bonds. I was familiar with the different processes, how to market a fund, how to raise capital, how to invest it over market cycles, how to survive a bear market, all the factors necessary for starting a fund. And when working with a lot of my bosses and bosses' bosses, I realized they weren't so much different than me, right? I thought if they could do it, I could do it. But one of the key things is they started those funds, they started those companies at a time when the tide was rising, right? Like you start a bond fund in the early 80s, sort of just as interest rates start their 30 or 40-year decline, right? Because when interest rates go down, bond prices go up. You start an investment firm kind of in the 50s and the 60s, kind of right when it's taking off. So if you can get into an industry at the right time, you grow with that industry. So that was one of the things that gave me the idea to start BlueCoin Capital. People think of it as just Bitcoin or Bitcoin and Ethereum. It's more than just a single coin. It's an asset class. It's an industry. And so you kind of hitch your name, hitch your career on that industry, and then you grow with it. You ride it through the ups and downs, but over the long run, you grow. And so I'm taking that institutional mindset and I'm bringing it over to this sort of, crypto native environment.
Yeah, that's great. I guess going through that process, Mike, what do you think about how to go about due diligence at another token or a coin, your allocation strategy? What does it look like for you, given your background?
Yeah, definitely. And it's that's really where my CFA comes in handy. A lot of people, they just read a white paper or they look at, what's been posted on X, and they get all caught up into the hype. And you really have to keep the skeptic's hat on, right? And you have to keep digging for answers until you really feel like you fully understand it and it fully makes sense. And the only way to do that a lot of times is either you learn it in your career or you get it in school, where you kind of learn what those standards look like and where the bar is. And so for me, you start off looking at the company, kind of hearing the pros and cons. Use AI. I use AI all the time just to dig deeper and to help me understand it. And then you critique AI, right? You say like, okay, well, what source did you use? Does this really make sense to you? AI can be a little bit like an idiot savant, where it can do some things brilliantly, and then it's also like a 12-year-old kid. It just right. So
I've been through that. Yep.
yeah, and then eventually it culminates into publishing something. You put it out there, and then you look for criticism. You look for ways to learn and grow and kind of improve your knowledge base.
And your strategy is long only, fundamentally driven, yeah?
Correct. Yes.
How many coins are you looking to hold at a single time?
Around 10.
Mm-hmm.
They say in finance the only free lunch is diversification. So
yeah. With
Very true.
okay, so yes, talk to us about these 10 coins. So what coins, maybe we'll start with that. What coins are you most bullish on right now?
right. Bitcoin and Ethereum, they make up the largest portion of the portfolio, and they're tried and true. They've been around a long time, and it's a reason why they're leaders in terms of market cap, because people use them and they have distinct moats, and they offer value for real world. They're solving real world problems. There's other coins in there like Ripple. I've got a small allocation to that, just in case they take off. Right, don't want to be left behind. But there's Solana's in there because it's a great number 2 to Ethereum in terms of DeFi, and it has a really growing DeFi environment in it. I've got smaller allocations to Maple Finance, the SERP token, even some equities, Coinbase. I got a sense of Brian Armstrong's character long before he became a publicly facing figure. And when you get a sense of who someone really is, that's kind of research you can't really get once that person becomes a publicly facing figure and they have a whole PR team behind them. So he seems like a very genuine person. And I'm bullish on everything crypto Coinbase is doing, even with their super PACs and the way they're trying to push for the Clarity Act and push for Congress. And I'm also invested in Strategy, MSTR, which is the most recent primer or write-up that I published.
Yeah, like definitely spent some time on MSTR today.
Yes, we'll dig into that.
I'm curious with when you started the fund, it was the concept really crypto only? Because and the reason I ask is because over the last, and the market's been brutal. Just to be
Mhm.
frank, over the last, probably 2 years, we were all kind of looking for a good bull run, which we kind
Yeah,
of, probably your timing worked out for me from January until December of last year, and then
yeah,
it's been kind of just down only.
yeah,
What what keeps you in the crypto space as opposed to, or I guess like how do you maybe the better question is how do you think about market timing?
yes.
Because
Mark,
obviously almost anything in AI has been up like crazy in the last
I know.
6 months. But market timing.
Yeah, yeah. I wish I was better at market timing. I really do. Wish I'd started my fund like 5 years ago, and I'd probably have like a nice mansion behind me,
But yeah.
and the park in the
There
background.
you go.
You know, and this goes back to my institutional training. Market timing is one of those things you just don't rely on it. Sometimes you get lucky, sometimes you don't. But it's about just really understanding what you're investing in, knowing where you are in the cycle, and then just riding it out, right? So don't get carried away when you're at the top of the cycle. Don't get disappointed and dejected when you're at the bottom. You have to keep that long-term perspective. My career started, 2006 before the subprime crisis. So I was working at Fannie Mae at the time, and I saw everything go down there, right? In terms of trading just stop, and traders had nothing to do. Um, and then the contagion that spread across banks, and then COVID hit like 12 years later. So I've ridden those market cycles before, and they come and they go. And sometimes a crypto winter is important because there's so much hype in this industry and noise that you need a winter to um, kind of like kill off all the weak players, right? All the people that are just running on narrative, get them out of the system, and then it's the real builders, the real revenue generators that survive, and then they build up a stronger ecosystem later. So, I wish I was better at market timing, but that's not how you run a fund. And you know, you take with it what comes with it.
Well, I think it's interesting talking about just the crypto winter, kind of where we're at right now. What does that look like? I mean, there's been a few cycles crypto winter
Yeah.
over time. What do you think about this time? And from a investing point of view, being patient, reading the tea leaves a bit as we go forward.
Yeah. The fear and greed index, I think, is at an all-time low. People are, I have people who really aren't in the space, but they'll tell me like, "Hey, I'm a little concerned. I think Bitcoin's a failed currency. Doesn't seem to be going anywhere." And that's a great sign, a counter contrarian sign that maybe we've hit the lows, right? And if you subscribe to the Bitcoin halving model, for instance, which the Bitcoin prices and then crypto in general have followed quite closely. You'd expect the bottom to be kind of any time now in the next few months, and then we'd ride it up. That being said, I'm always 50-50 on these kind of things, because I've seen them in traditional finance as well, where there's these rule of thumbs, and there's no like clear evidence why they must be true. They're sort of just like a heuristic, sort of something that tends to happen, but that doesn't mean it's going to happen. So I'm 50% that it's another typical cycle, right, for you're having, and then it's 50% that could be something else. Maybe Bitcoin trades sideways for an extended period of time. Maybe there's some sharp drawdowns right along the way, but um, what I'm certain on is the value in Bitcoin and the long-term potential. I don't know how we're going to get there, right? What kind of bumps are going to be along the way, but the long-term potential is there because I see and understand the value behind it.
Makes sense. Yeah, if we could just wait it out a little bit longer.
Yeah.
Hopefully, it looks good on the other end. Um, are you fully allocated right now? So do you have any cash or is it all fully deployed?
Yeah, the fund is actually levered a little bit. So we have about 10 to 20% leverage, not, like 2x or 3x, but I think it's important about knowing where you are in the cycle. And given that we're so close to the lows, if we haven't already hit them, the probability of coins going up versus going down, I think are skewed to the upside. So I try to position the fund in such a way that it matches that sort of distribution of future returns, and it's got a little bit of leverage so it can benefit when things go up. But at the same time, if things get worse, the fund's also protected because it's just a very conservative amount of leverage.
Totally. With I guess maybe like kind of a loaded question, but with when it comes to your trading, do you prefer to trade spot crypto, or are you? I would almost think with some of the allocations you have, it's probably better to just put it into whatever interactive brokers, trade ETFs.
Yes. I'm
Yeah, what do you think about that?
I know this might irk some crypto natives, but yeah, I'm pretty agnostic to it. A lot of the passive ETFs have such low fees, given especially the return potential, that it's more about how easy it is to get access, right, to
You don't need to sweat the.
certain investment, and then other factors like the ability to rehypothecate or to get margin loans against, and all that kind of stuff comes into consideration. It's more important than owning the actual spot. I mean, when it comes to owning the actual token, unless it's on a cold wallet somewhere and you have the keys, yeah, if you're buying Bitcoin on Coinbase versus an ETF on another broker, I don't know if there's really that much of a difference.
Agree. That's yeah. Well, then hacked enough times. Or I've seen people get hacked.
Yeah.
Yeah, I totally agree with your sentiment there.
Not your keys,
Right.
not crypto.
100%. I guess when it comes to like holdings like Ethereum, Solana, you like to stake,
I'm sorry.
or like I guess maybe just buy like when it comes to like Ethereum, Solana, are you staking those or choosing like stake ETFs to get the yield along with it?
Yeah, I stake it when it makes sense, but there are times when I have to purchase the ETF equivalent and then I cannot. But the reality is that the staking yields are so low that, again, other factors like being able to take out margin or loan a security or something like that often trumps the yield that you get from staking.
Maybe walking us through kind of just talked about leverage as well. That gets brought up quite a bit in this world, and it means different things, to different people.
Yeah.
You mentioned obviously you're not, 2x, 3x levered, but talk through that process, how you think about it from your portfolio point of view, and maybe, how the approach is going forward.
Yeah, and I think appropriate use of leverage is kind of what separates, the amateurs from the professionals. So there's a lot of different ways to get leverage. I mean, you can go on a perps DEX exchange like Hyperliquid and go 20x Bitcoin, or you can go on Kalshi and do the 5-minute Bitcoin price predictions. And there's a whole lot of ways, for degens to invest in this space. But like I said, I'm taking on leverage. I like to do it very modestly, usually margin. Like a brokerage will allow you to borrow a certain amount of money against the value of your holdings. They'll charge an interest rate that's like 5% or so, which is reasonable, and then you can take on some leverage at that point, and it costs you, of course, 5%, 6%, but it's backed by your holdings, and it's from a secured lender. And that's pretty much how I do it. There's a lot of other ways. There's levered Bitcoin ETFs, but those tend to be good for only short term, like maybe a few days, because the way those ETFs get leverage is they use futures contracts. And traditional futures contracts, a lot of times what'll happen is, they'll roll the contract every month, and because the contract will expire on a monthly basis, and then when you roll it, you actually lose money kind of selling it and then reinvesting in the next month. So that loss bleeds over into the ETFs, which means they're great for short-term plays. But if you've got a long-term outlook, like over the next 6 months, I think Bitcoin's going to appreciate. Then that's not really the space you want to be in. So I stay away from the hyper liquids, the 20x leverage. I stay away from the levered ETFs. Really, it's margin and then strategy, which I think is one of its key value propositions. Is it's leverage that is free from a margin call, which a margin call is like every levered investor's nightmare, right? No one wants to get that kind of call. That's a bad call. So
that's right.
Yeah.
100%.
Yeah, never a good scenario. I wanted to ask you, going back to, I know Mike briefly brought it up about AI and that narrative, how that's affected your trading strategy, for good or bad, based on, Apple allocating to AI in a lot of different ways in real time. What does it look like for you?
Yeah, I mean,
from your lens.
Of course, I'd love the number to go up, and I'd love for all the speculative capital to rush into crypto, and then my fund takes off. But long term, it's not about just number goes up. It's about building real infrastructure and real value. And in that light, I think AI is critical. It's opening new doors and new uses for crypto that didn't exist before. And also, like I said, the winter is good because you kind of, the weak die out and the strong survive, which just makes it stronger. You saw that with FTX in 2022 and cycles before that. So, and I think with AI, right, I think the biggest use case is using crypto as payments, right? Because AI is 24/7. They need permissionless rails where it can just send money, and it's such an early stage that no one knows who the winners are going to be, which protocol is going to win out, and so when I'm very early in those situations where I know there's going to be some kind of growth, but I don't know who's going to be the winner, I try to go for a layer which I know is going more of a base layer that I know is going to win. For example, like it's one of the reasons why I'm more bullish on ETH and Sol, right? Ethereum and Solana, because they're base layers that settle a lot of crypto transactions. They're big in DeFi, and so they're natural payment rails for these agents, right? And of course, there's more like permission things like Stripe and Tempo and Circle's building their, I think it's called Arc, their own payment rails, and those I think will also do well. But going for ETH and Sol, I think are more safer bets on that future symbiotic relationship between AI and crypto.
Yeah, absolutely. Yeah, a lot of things to happen in real time. To your point, we'll see who the winners and losers are.
Exciting times.
Next few months here, few years. It's happening so fast too, as we all know. New models get spun up every week.
Yeah,
new opportunities. Yeah,
cheaper Chinese models, open source, open weights coming through, and we'll see kind of how the landscape settles.
Yeah, absolutely.
Yeah. Now with let's do our deep dive into MicroStrategy. So MicroStrategy's got their two products, MSTR and STRC in particular.
Mm-hmm.
We're recording this a couple weeks after kind of the big events, if you will, happen. But I still want to have you on to talk about it because I think it's interesting and I think it's important for people to kind of understand what STRC really is. So maybe from a high level, obviously a lot of our viewers are familiar with both products, but maybe just give people that are listening, what is MSTR, what is STRC, and you can a quick blurb, if you will.
Yeah, I mean, with regards to strategy, honestly, I came into it as a skeptic, and as someone who found it practical. So, going back to our leverage conversation, kind of after February, we were in the middle of winter. Markets had hit fresh lows, and I was looking for ways to get leverage, and there just weren't a lot of good ways. I kind of mentioned all the reasons that weren't appropriate for the fund, and this idea that there was this this kind of easily accessible equity that provided leverage that was margin free and had a premium that could expand seemed very enticing, but it also seemed like a Ponzi scheme, like this whole like flywheel, like people paying a premium, basically like the way the flywheel works is there's a premium, right? So what that means is if you kind of add up all the stock, right, the value of the company is worth more than the underlying Bitcoin. So my first thought was like, okay, that's weird. Why would anyone pay more than the value of the Bitcoin? But I'll just suspend that for a second. So in theory, if people are willing to pay more than the value of the Bitcoin, then you have this premium effect, right? And yeah, in my write-up, I kind of break out the circle, but I also have math, for later if people want to dig into it, because I had to prove the math to myself, where if there's a premium, then that allows the company to issue shares that are accretive, right? So they can issue shares at a premium and then buy more Bitcoin, and that actually adds value. Now, what's happening is the people who are paying that premium are sort of funding the flywheel. So once I got to that level, I realized, okay, it makes sense, assuming people are willing to pay a premium, but why would you pay a premium? Why would you pay more than what the Bitcoin's worth? So I went a layer deeper. And then I realized, okay, there's a few things going on here. First, they're trying to increase the amount of Bitcoin per share, right? And they're doing lots of little buys all the time. So the idea is, you can buy Bitcoin and hold it, or you can buy equity in strategy, MSTR, and then the amount of Bitcoin underlying it will increase over time. So I thought that was interesting. And then when I learned more about it, I realized another reason, to me, I think this is more significant. Another reason why people would pay a premium is for the leverage. Unlike many other competitors, like ETFs, levered ETFs that use futures, and so you don't want to hold them for a long time. Strategy uses the capital markets, and the average investor does not have access to the capital markets. And the capital markets provide long-term borrowing, right? Long-term leverage at very cheap rates. And it's sort of like regulatory arbitrage, right? I can't access it, but they can, right? And then they're also listed in certain indices, which give them an advantage as well in terms of being able to issue preferreds or debt that, as an individual investor, I cannot do that. I cannot get access to that leverage. So I can now tap into that capital market leverage through strategy, and it makes for a great long-term levered product. So basically, if you believe that Bitcoin's going to go up over the long run, and you want leverage, and if the premium is compressed like it is now, it means that there's a reason to pay a premium, and then if there's a reason to pay the premium, then you have a flywheel that's going to work.
Good point.
Yeah.
Sorry to interrupt you, Mike. I was going to say, so it's kind of, maybe a simple way to think about it too is they're taking out this debt for Bitcoin. So maybe you're buying in a whatever the price is today, $65,000.
Mhm.
That's still $65,000. You're really hoping that Bitcoin goes up, because when it goes to $120,000, now the debt to equity is 50% instead of 100%, right?
Exactly right, because the debt is denominated also in dollars, right? So that pretty much stays fixed. And so it does have that effect that as the price of Bitcoin goes up, the leverage actually shrinks. And something else to keep in mind is the premium only really kicks in during a bull market. Right? No one really wants leverage during a winter or a bear market, which is exactly why the premium is close to 1. And that also made me concerned about something else. I was thinking, okay, you've got this flywheel, right? It's a virtuous circle. What if things go in the opposite direction? Could it become a doom loop? But when I dug into it, I realized it in a really dire scenario, the flywheel just stalls. It doesn't really have a downward spiral into catastrophe. It just stalls. Um, and the reason is because, let's say the premium goes in reverse. Let's say people are not willing to pay dollar amount equivalent to the underlying Bitcoin, but they're willing to pay less, like 90 cents on the dollar. So now the premium is negative. Well, they don't have to then, they're not forced to sell Bitcoin. They can just wait. They can just hold it. Now that means the flywheel has stalled, so you're not getting more Bitcoin per share, and it's just going to sit there. But it's not going to go into some kind of doom loop either. And it kind of just goes back to this idea that as long as Bitcoin is going to go up over the long run, it's fine. Bitcoin drops to $30,000, $20,000. Strategy's fine. It's not dependent on the short-term price movements. It's just dependent on this long-term outlook. And you could actually do a similar business model with any commodity. It's just that there are no other commodities really that increase in value over time, right? By any significant measure. I mean, I guess
Right.
gold,
Maybe gold, but not yet.
Yeah.
But it's not by design. Like gold, it's just had a run because of excess government spending and in China central bank buying a lot of it, right? There's not like a structural reason why gold's going to go up, why gold should 10x over the next 10 years, right? So if you believe that Bitcoin's going to go up and do well over the long run, then strategy, I think, is very secure and it's a no-brainer. And then I think in the bear case, if Bitcoin just trades flat or even goes down, then what you get is a slow bleed where there's no flywheel, there's no extra accumulation of Bitcoin. It just holds the Bitcoin, and then as the value of the Bitcoin goes down, so does the value of your investment, right? So I think that's kind of like the realistically that is the bear case. That is the worst scenario, that you get that slow bleed over many of years. But hey, I wouldn't be in this space if I thought that was going to happen, right? Obviously, I see the value of Bitcoin, so I see the value in strategy. And I think the capital stack and the structure of strategy is relatively sound.
It comes to good overview on MSTR. Now their MicroStrategy's other product, STRC Stretch,
Right.
the other way it's known. Just talk to us about that, what it is and how it works.
Absolutely. So, Stretch, it's preferred shares. That comes lower in the capital stack than debt, but higher than common equity. So, in the event that a company is liquidated, debt holders get paid first, then preferred shares, then common equity. That's how it works. So, when calculating a lot of different metrics from the perspective of a common shareholder, right? Like if you want to say to yourself, okay, as a common stock shareholder, how much Bitcoin do I own? You look at all the Bitcoin, then you subtract out the debt and the preferred shares because they come before you. And Strategy's been an innovator in kind of combining Bitcoin and capital markets. So before the preferred shares, they were dabbling in leverage. Several years ago, they got leverage in terms of a credit line from a bank, right? That was their kind of first attempt. And that ended almost disastrously because they got margin called on it, right? And that's when they learned that lesson, the danger of a margin call, where Bitcoin dropped, so the value of their collateral dropped. So then they got a margin call from the bank, and they said, "Hey, you have to, give us some money or whatever, pay us back because, the collateral's dropped." And luckily, they were able to ride through that and save themselves. So they've been through worse scenarios than they are today. They saved themselves, and they switched to convertible debt. Saylor and his team, they kind of searched out the capital markets and found sort of an unmet demand, like a niche that they could go into. And so they did the convertible debt. That worked well for a while, but, debt has a maturity date. It has a sort of a payment cliff where now all of a sudden you owe billions of dollars on a certain date. and that impedes their flexibility. So a couple of years later, they invented a new thing called preferred shares, and this is Wall Street's inventing stuff all the time, right? So in a way, it's nothing new, right? That's what they do.
Right.
But he kind of found this niche where, okay, if I do preferred shares and I don't have any maturity cliff because I never have to pay it back, I do have to pay a much higher interest rate, but I have a lot more flexibility on my terms, right? Like you can suspend the dividend's cumulative, but you can suspend it. So if, let's say, there's a crunch, and to suspend it for a month or two, you can do that. There's no massive maturity cliff of billions of dollars you have to pay back. And the interest rate is also flexible, right? So what they're doing now is they're trying to transition from convertible debt to preferred shares, and they've even paid some the convertible debt off. I think where they went wrong is, they launched it last year when things were going well. So this is the first real stress test, right? Going through this crypto winter, and the market, I think in general, is not as confident as I am, and which is why the price is trading well below 100, right? Because the way he marketed it was, this is digital cash or digital credit, right? Trades at 100,
Right.
super safe. Not the case. Clearly, there were a lot of people who were not reading the fine print. They don't understand what preferred shares are.
Yeah.
And the interest rate, which is variable, it's supposed to be able to keep it at 100 because it goes up. The interest rate only resets monthly. So what happens when there's intra-month jitters? Of course, it's going to trade well below 100 because you would need an interest rate that resets daily to guarantee something like that, right? And then you combine that with the crypto winter, and it's a new product, so it hasn't been tested yet, and you have a lot of like FUD, fear, uncertainty, doubt all over X, and also the majority of the purchasers were retail, right? I believe if the majority were institutional, you probably wouldn't have had such of a drawdown. And one of the things that really caused the sell-off was the fact that this happens in crypto a lot. People were levered up to the nose, right? Like they thought this thing was going to trade at 100 and they were getting 10%. And so they were just going to lever it up and get 20, 30%. And then when it dropped to 90 or to 80, there were tons of margin calls, and meaning they had to sell it to pay off the loan or to pay off their margin. And then the price dropped even more because of the selling, right? That's how you get that steep drop, and then it bounces back. And I think last I saw it was approaching 90. Yeah, see like 80, 89 there or so.
Yeah. I want,
Yeah.
and I think this is some of the most interesting aspects to talk about. It was down 20, almost 29% at one point. So supposed to be stuck at around 100. It dropped to about $70.
Yeah.
So what do you think this was? Just kind of market fear here?
I think it was a couple of things. I think it was basically deleveraging. It's a lot of people just didn't understand what preferred securities were, and they really thought this was digital credit, like a money market fund. And so they levered it up, and then intra-month when it moved, right, and then went down to 90 or 80, they were forced sellers. They had to sell it, right, to pay back the margin that they borrowed. There's even a stable coin, it was APX USD, and they had used Stretch as some of the collateral to back their coin, right? So this is like a stable coin USD, and they have a preferred shares backing it. Like that's kind of crazy, right? And so of course, when STRC dropped, it freaked them all out, and their stablecoin depegged, and that was a whole nother wave of selling. So it was just the market not really understanding what this product was, placing too much leverage, and then you just got that fallout and that contagion, and then it rebounds sharply, but it still hasn't gotten back to 100. And they've increased the variable interest rate up to about 12%, I believe, and they've increased the cash buffer to over 2 years, right? 2 years worth of dividends they have in just cash. pay it off. And I think right now they just need time for the market to heal and for people to sort of readjust the frame of mind. I mean, taking a step back, strategy is really, it's going through an evolution process right now. Originally it was just never sell, just buy and hold and let the flywheel kick in. But it's evolving to be more of a sophisticated asset manager, and it has more levers now, right? It doesn't just buy; it can sell Bitcoin. They said they were going to do it, and they sold 32, and now they've sold hundreds of millions of dollars of Bitcoin, and they're showing that they have all these different levers. They can buy back the preferred shares. They can sell the Bitcoin. They can issue more MSTR. They can kind of play these different keys depending on the market environment that they're in to be more efficient in their ultimate goal of just acquiring more Bitcoin. And so I think their goal right now, they're all in on these preferred shares and they're trying to stabilize them. Once they're stabilized, that cash buffer is going to come down to 12 months, and then they're going to use that cash to either pay off the convertibles or to buy more Bitcoin. And then once you see Bitcoin starting to go up, all these problems are going to disappear.
Yeah, it's interesting. We talked about a few things here: strategy and marketing and strategy as a digital credit situation. But you're describing here more perpetual preferred equity.
Yeah.
With discretionary dividends and no maturity, right? So what is an investor really buying? What should they be thinking about this? Going into it.
I mean, right now the interest rate's 12%, but effectively it's a little bit more because it's trading at a discount.
Right.
Personally, we don't own. So I own MSTR personally and in the fund. Full disclosure there. We don't own any stretch, simply because it's more of an income vehicle, right? And that's not the goal of the fund. It's growth. But for individuals who are more income focused, they want to preserve their capital and then earn a good income. I think stretch in some cases, depending on the person, this isn't investment advice, could be a great complement. Again, it comes down to how you feel about Bitcoin. If you think Bitcoin's going to go up over the long run, then I think stretch is a great place to be right now. If you think Bitcoin is just like a fake currency or a Ponzi scheme or something, then don't go near strategy, right? That's toxic. So it just depends on your outlook. And I think that for me personally, I think stretch is compelling, and I believe it'll return back to 100 eventually.
When it comes to somebody that's very bullish on Bitcoin like yourself, would you prefer to buy SPY or MSTR?
Yeah, I like to diversify. There are real risks to strategy. That's why it's great to own some, but you don't want to go all in. There's the key man risk, right? You've got Saylor, and then I think Fong Lee's like maybe another notable guy. And Saylor, he still has, I'm trying to remember now. He used to own like a majority share, and I believe maybe now he owns like less than 50%, but he still has effective voting control. So it's in many ways it's like a one-man shop. And I think so far he's been doing a good job, but there's a real key man risk with strategy. There's risk with execution. It's, as we've seen, I mean, in the crypto winter, things get a little hectic, and if they make the wrong decision, they could blow it up. I don't think that's going to happen, but it's a tail risk that needs to be kept in mind when investing, right? So, just like I like to invest in a diversified basket of stocks, not just a single stock. It's the same thing with Bitcoin. Have some MSTR, but also have some ETF. Maybe even have some, a cold wallet, right? Just to kind of have the keys yourself. So diversification is key.
I guess just to this point, Mike, anything that we haven't covered that you'd like us to touch on?
Good question. You guys asked a lot of. You guys did your homework. You asked a lot of good questions. I think some other risks worth mentioning, other than the key man risk, is Saylor does have a very ostentatious way of presenting it, and I think I see the logic in how he does things. But for a lot of people, it feels like he's been moving the goalpost. Like, first he said they would never issue MSTR below a 2.5 MNAV, like the premium of 2.5, because the premium's been like up to 4 before. People are paying 4 times the value of the Bitcoin holdings. And so, they kind of changed that. First, they said they'd never sell Bitcoin. Now they are. So I see it as an evolution, but a lot of people see it as moving the goalpost and kind of changing the rules of the game, kind of suit your own situation. And
I can just look at that real quick. Just talking about approximately 1 times MNAV, right? What does an MSTR investor actually own? Like just kind of Bitcoin, leveraged Bitcoin, or an option to Flywheel restarting, as an example.
Yeah, they
on that.
Yeah, I mean, they effectively own leveraged Bitcoin. It's sort of like right now it's like 1.5, 1.7x. And so they own common stock and strategy, and again, it comes after the debt and the preferreds. So after those obligations are paid, they own all the Bitcoin that's remaining. And right now, the MNAV is trading close to 1, right? So after you subtract out the cash, the debt, and the preferreds, basically people are paying $1 1 for 1 in terms of the Bitcoin underlying it. And then in a bull run, I think that could get up to the premium could get up to 1.5 or even 2, if let's say Bitcoin hits its all-time highs again around 125. And I have like mathematical explanations in the write-up.
Yeah, absolutely. We'll make sure to include that in the show notes as well. Sure.
Cool.
Mike, I'd be remiss not to ask you, as a new fund manager, when you're starting out your fund, what do you wish you knew then that you know now? This could be anything. This could be service providers or, whatever, investors. What do you wish you knew when you started last January?
Yeah. I guess I wish I knew that the crypto winter was coming. I would have invested differently,
Yeah.
Right.
Wish I knew
Totally
that it was
understand
gonna
that.
peak at 125. I really thought it was going to go higher. So I was a little disappointed with the winter. So far the winter has been more shallow than what many predicted. So I've kind of I've been on the right side of that thinking. But I wish I'd known about the winter coming.
The only other question I was thinking about with like when it comes to starting funds is getting investors, getting new capital. And how do you think about that? Do you think about this kind of more as a vehicle of for yourself to you're deploying capital the way you want, if kind of investors want to come for the ride, they're welcome. Or are you actively seeking investors? How are you thinking about that as?
Yeah, absolutely. So when I put the fund together, I think honestly, doing good business, you want to design something for the customer. And I think what really sells well is like market neutral funds. I think when people think of hedge funds, they think of market neutral. But what I wanted is I just wanted to do kind of my own personal project. I wanted to create something that I would invest in, that I believed in. And my thesis was like, you could do a market neutral that generates 20% return a year. And people are going to love that. But if you're long only, you're going to have some rough times here and there, but you're going to well exceed 20% a year over the long run if you go long only. I'm really bullish Bitcoin and Ethereum. And so I built something that I myself would want to invest in. And I do. I have a significant amount of skin in the game. I think that's what differentiates BlueCoin fund from a lot of other funds, is that most funds, especially the larger ones, they have professional portfolio managers, right? They're talking on the podcasts, they're going to road shows, they're raising it, but how much of their money is actually in the fund, right? They get like a W-2, they get a salary, right? I own 100%, meaning like I'm 100% owner of the GP, and I have a decent slug of my own net worth in the fund. So I've got skin in the game, And our fees are similar, like 2 and 20, except our 20% performance fee is charged above a benchmark, right? So our performance needs to exceed the benchmark and exceed a high water mark before the performance fees kick in. So, you don't pay for beta, you
And
pay for
your benchmark is Bitcoin your benchmark or
it's a Bloomberg indice benchmark. It's a diversified basket of cryptocurrencies. Yeah, Bitcoin's been a tough benchmark to beat, so I'm glad I didn't make that my benchmark.
Right. Yeah, it
for
can get a little
sure?
rough. Yeah.
Yeah, glad to have a little alts in the basket there.
Yep.
Yeah, exactly. Diversification, it cuts both ways. So
It definitely does.
I love it. Well, Mike, we really appreciate you joining us. Appreciate you
Yeah.
sharing your insights, telling us a little bit about MSTR, Stretch, and your fund in general. It's a lot of fun. Where can we send people to find you and connect with BlueCoin?
bluecoin.capital. That's the website, bluecoin.capital. You can find my contact information, podcasts I've been on, research write up. It's all there.
Amazing. Well, this has been great, Mike. We'll make sure to include all that contact info in the show notes and also reference to all the things that you've written as well relative to MSTR strategy.